Stocks are plummeting after the latest jobs report, and Nvidia slides 12% in just 3 days. What caused all this? Let's break it down together. I'm Daniel, and this is Stock Market Recap. Stocks had a rough day today with the S&P dropping 1.5%, the Nasdaq dipping 1.5%, and the Dow sinking 1.6%. All three indices are now 5% down from their highs, meaning we are officially in pullback territory. So what happened? Let's discuss. This morning, we got a jobs report that showed us that unemployment edged lower, and the economy added a lot more jobs than people expected. Now again, while this might sound good on paper, this is actually pretty bad. I covered this in one of my recent shorts. If you didn't watch it, go check it out. But to sum it up, more jobs equals more likelihood of inflation. More inflation equals less rate cuts, and less rate cuts is bad for stocks. Nvidia got a lot of the bearish momentum recently, with the stock dropping an astounding 12% in just 3 days, losing a total of 440 billion market cap. I personally think that there's a lot of panic selling going on right now, but we will see how things play out once the inflation report comes out on January 15th. Next up, let's talk about Constellation Energy. Their stock was up 25% today after they completed their $30 billion acquisition of Calpine. After all the good news lately, their stock is now up more than 30% just for the week. If you'd like some more info on the other good news, make sure to check out my other short. And finally, let's talk about Nike. So yesterday I said this, and Nike's trading at its lowest level in 5 years. Yeah, I kind of forgot to record that segment, but we're doing it now. Nike stock is at a rock bottom, trading at 5-year lows. So Nike, just like any company, reported earnings 4 times in 2024. And although their numbers were alright, the stock fell every single time. Nike's definitely one of the most oversold stocks in this market, although the business does have its problems. So Nike's actually dealing with declining sales right now, especially in China, where their revenue is falling 8% year over year. This, along with many other concerns, are leading investors to sell the stock because they simply don't believe in the business in the short term. I think it's definitely an interesting stock to follow, but personally, I don't see a reason for buying it right now. That's all I've got for today. Hope you enjoyed, and I'll see you next time.